Capital Funding's Mortgage Fund 1 investors, I'm Alex Bogumil, your fund manager, here with your April performance review. So let's jump in and take a look at how we've performed. In April 2026, we had a monthly annualized return of 9.09%, giving us for year to date an annualized return of 9.83%, well within that target of 9 to 11% for our investors. So continued to have steady, consistent monthly distributions. If you take a look at your monthly fact sheet, you also notice that now we've had over 3 years of consistent monthly distributions in the fund. That's a really big accomplishment for us, 3 years of distribution, so we're very excited about that. The net asset value of the fund is almost at $16 million, and actually as of today, we're right at $16 million in investment capital raised. Total originations in the fund approaching $40 million. We now have 40 investors in the fund, still looking for more, and we've distributed almost $2.85 million to those investors. Remember, that's the monthly distribution that you get. We have had a few partial redemptions for investors, and that's up to $500,000. If you do have a redemption request, just send me an email and we will handle that as quickly as possible. In the past, we've been able to handle that same week. So if you do have a redemption request, we are there. There is liquidity in the fund once you have your investment after 6 months. All right, some important numbers to share with you. Year to date, 2026, we've raised $3 million in new capital into the fund. Why is this good? Because we're able to make more loan originations and grow our borrower base in that Central Florida area. So we just become a stronger lender, and it's going to add to more better long-term relationships with our borrowers, which makes us a more safe, secure investment for our investors. In May, we had $2.5 million of originations. That contributed about $20,000 in loan origination fees. That's good because that increases the monthly yield that we pay out to our investors. So loan origination fees are great. We'll keep them coming. The more capital we'll have, the more loan origination fees we're able to create. All right, I'll just touch briefly. Central Florida market real estate has been steady to good, I would say, in my opinion. We started to really see a pickup in demand a few months back going into the Iran conflict. And then as soon as the Iran conflict happened, interest rates rose. We were getting close to that 6% on a conventional rate. Now we're back at 6.75%. Interest rates got down to about 6% for the 30-year conventional rate. Now they are at 6.75% at the 30-year conventional. We seem to pick up demand when they hit about 6.5%, at least going into the spring and summer months this year. But demand has remained steady even given the increased interest rates. Inventory has been slightly down to steady as well. Kind of thought that would pick up going into the summer months with a bunch of new listings. We haven't really seen that. We have seen a little bit of lower volume for the fix and flip investor, although we still reach out to our existing borrowers and we're still able to gain more borrowers for new originations as well. So we'll share one chart with you. This is internal information, and this chart is our loan to sales price ratio on properties that have sold within the fund. So when the borrower borrows the money, they do the renovations and they sell the property. We like to take a look at how much the loan is in proportion to the sales amount of the property. So the lower the amount, that means the more protection our investors have. That means we've made a good loan. 65% is kind of what we shoot for going into it. And as you'll see here, historically, 2023, 24, 25, and 26, we're hovering around that 60 to 62%. So what does that mean? That means that our loan represents 62% of what they sold that renovated property for. So that's the cushion we talk about. That's the margin of safety that we're always referring to in our presentations. And the lower that number can be, that means that our loans are under less risk from any economic downturn or changes in the marketplace. All right, some important dates coming up for us at the fund. 6/15 is our estimated date that our auditors, Cohn Resnick, has given us for the completion of our 2025 audited financial statements. As soon as we get that finalized, we will send that out to everybody through Flow, and you'll get an email notification as well. And we can send you a mailed copy as well if you'd like. Continuing on our 2024 audit from CohnReznick. 2025 is going to be our second year of audited financial statements by them. Really means a lot to us. It's our transparency that we're providing. This is not required for a private placement investment, but we like to do that so we can give that to our borrowers so they're not looking at a black box investment and they actually know what we're investing in, and that somebody else, a third party of CPAs and trusted professionals, is reviewing not only our numbers but our processes and making sure that if they need changes that they will be changed. So anyways, we think it's a big step in providing confidence to our investors. It's not something that everybody does, but it's something that we do, that we stand behind, and that we will continue to do in the future. June 30th is a deadline for our REIT classification with the IRS. What does that mean? By June 30th, that means we have to pass all the income, the asset tests, and the 5 and 50 test to be classified as a REIT. If we are classified as a REIT, our qualified dividend income receives that 20% deduction on our tax returns. So that's something we really want. We're right up on the wall on the 5 and 50 test. That means our top 5 investors cannot make up 50% of the total capital contributed in the portfolio. That tends to be a tough one to pass for newer funds that are still in the growing capital phase. So we are right at that hurdle. If anybody is interested in adding to their position right now, or if you know anybody that's got a new investment that wants to add, that'll be greatly appreciated, especially if it's before 6:30. We're always looking for new investors, but if we can get them in before 6:30, that'll be a great thing for us as well too. If we don't meet the numbers, we have an equity to debt conversion function that we can do with our attorneys. That'll give us plenty of cushion. There's no concern about not meeting the 5 and 50 test, but we can meet it without doing that transition of equity to debt, as long as we have, I think we're at this point a couple $100,000 away in capital contributed. So if you have any CDs that are expiring, or if you like your investment so far and you want to continue to build that investment, you enjoy the monthly distribution or the monthly reinvestment of your distributions, please reach out to me and we can get that completed for you rather quickly. As always, if you have any questions, please feel free to reach out. We're here for you guys. We've got a event, if you're in the Central Florida area, coming up on June 18th. It's going to be kind of a social mixer to meet some real estate investors. We're working with another wholesale group and maybe a couple title companies. So it should be a good turnout. There's going to be some food and a couple drinks. If anybody is interested and happens to be in the Central Florida area on June 18th, you are welcome to stop by, reach out for us. We're also going to be marketing it on our social media channels. So I hope you're enjoying your investment in Capital Funding's Mortgage Fund 1. Can't wait to get that 2025 audited financial statement out to everybody. And if I don't hear from you, have a great rest of June, and I'll be following up once we get those performance results from our May period. Thanks.